Curious, as you were sitting in Omaha this weekend, what you think the future of Berkshire looks like and whether you think it ultimately changes in a Greg Abel world.
Sure. So I think, Buffett has been very thoughtful about everything in his life, and in particular Berkshire, setting it up so that after he is no longer running it, it continues to succeed. And I think he's achieved that by buying these really great businesses. But I would say maybe more importantly, building a culture, principles, governance, thoughts that he's imprinted in the minds of the shareholders and imprinted, obviously, in the minds of the executives and the board of directors. So I think you've got a principle-based company that's going to stay a principle-based company going forward. Now he's stepping aside with $350 billion of cash on the balance sheet. I think, Greg Abel's known to be a superb operator and a very good allocator of capital, certainly in the businesses that he's managed. I think it's yet to be proven that the current management team has the capability that Buffett has had to obviously buy businesses, and it's more challenging now because of the scale. So I think for sure the businesses will be run arguably, potentially even better than they've been run historically, because now a great real operator focused on that, running the company. The question, though, is, one, I think they're going to start returning capital.
You do?
Yeah,
in the form of dividends?
I think dividends. I think they will be a little bit more aggressive about buying back stock. I don't see Berkshire waking up in 6 months and Berkshire announcing a $100 billion acquisition. I think the new CEO will be, and the new board, not the new board, the new CEO and the current board will be a little bit more careful on the first deals, because if Berkshire's first deal turns out not to be a good one, I think that the market will kind of frown upon that. But I think the business will do very well. You've got Todd, you've got Ted, you've some very capable people, and it's extremely well capitalized. The insurance business, by the way, has a lot of continuity and some great talent. So I wouldn't bet against Berkshire.
One of the things that's happened is it's become a crowded market, meaning there's a lot of private equity players that are trying to buy up, I imagine, a lot of the stuff that you may want to buy. By the way, they're buying up a lot of the stuff that Warren Buffett used to buy.
Sure.
So what's going to give you an edge in this case?
Sure. So one, we like great businesses, and so do private equity firms. But the big competitor, maybe by example. So I met with Glenn Youngkin, formerly co-CEO of Carlyle, now governor of Virginia. And he was saying, I really love what you're doing with this Howard Hughes thing. This is when, again, it was publicly announced, but obviously we had not gotten to the deal done. He says, the biggest problem I had in private equity is I'd have to sit down with Mr. Smith and tell him, you realize, of course, that after we buy your business, you're going to kind of be on the merry-go-round. And every 5 or 7 years, your company that you built is going to get sold to someone else. And I had to be candid with them about this, but that's the nature of private equity. And what Buffett was able to achieve over time is he could sit down with Mr. Smith, who was maybe 70 years old. He built this incredible business, an important business in the community. And he can say to him, look, I'm going to buy your business. I'm going to take very good care of it. I'm going to own it for decades. Your employees will be proud. And Mr. Smith found that a very appealing notion after he spent his entire life building a business. Now, the issue for Berkshire today is that at $1 trillion scale, buying even a billion, $5 billion, even $10 billion business doesn't move the needle. Whereas for us, of course, we're starting out at, the market cap today, is $3.5 billion or something. So we have the benefit of starting small, but we have the similar benefits of being able to be a permanent owner of a company, which is something that, depending on where we have to get our stock price to closer to intrinsic value. We can also offer a tax-free execution. We can give someone the ability to kind of sell some of their business for cash, sell them for stock, and go along for the ride with us.
Becky's back in Omaha, where you just came from. She's got a question for you, Bex.
Please.
Hey, Bill, great to see you. Thanks for coming on with us this morning. I'm so intrigued by what you just said about how you guys would either build or buy an insurance company, that the benefit of the float hasn't gone unnoticed by you. First of all, do you think it'd be easier to buy one or to build one? I don't know where you think prices are and valuations are on these things right now. And second of all, over the weekend, something Ajit Jain kind of focused in on and talked about on stage was the idea that all these private equity companies have now gotten into the insurance business, and he thinks are writing premiums that aren't at great prices and that don't make it very profitable long term to do some of that business. He basically said, almost in these exact words, that Berkshire's waving the white flag when it comes to some of that, particularly when it comes to life insurance, I believe, that they can't write that insurance at competitive levels because he doesn't think the pricing is right from private equity.
Sure. So what Ajit was referring to is that the Apollos of the world, Brookfield and others, have issued annuities, which are more financial products than they are insurance products, but they occur in the context of a regulated insurance company, and they take that capital with multiple of that capital, and they lend it with their sort of proprietary access to private debt type deals, and they make a spread. And that business is, I would say, getting more crowded over time. But to answer your question directly, I think it's more likely that we will build an insurance company. In fact, we have a person that is a phenomenal executive in the industry that we're just beginning a conversation with that's intrigued by what we're doing. And I like the idea of building from scratch because you don't assume a bunch of other people's kind of liabilities. And I think he's a super talented executive, and hopefully we can make a deal with him. But that would be, I'm kind of more intrigued with the idea of building something from a blank sheet of paper.